Let me ask you a question. If you had money in your bank account right now, how sure are you that it's actually safe? I mean, really safe. Most of us never think about it. We just assume our money will always be there. You work, you get paid, save your money, and you trust the bank to keep it safe, right? But what if I told you there was a moment when millions of people discovered that trust wasn't as solid as they thought? A moment that shook the entire financial system. And without that moment, Bitcoin might never have even existed. Now, when most people hear the word Bitcoin, which we can also call BTC for short, they think of people getting rich. They think of crazy price charts, people becoming billionaires overnight, or maybe they think it's just some internet money. But that's not where it all begins. The real thing starts with fear and anger, and a financial crisis so bad that it nearly brought the global economy to its knees. Now, back in 2008, while most people were trying to survive one of the worst economic crashes in modern history, someone was quietly working on an idea that challenged the way money had worked for centuries, an idea that didn't need banks, didn't need government, and didn't need permission from anyone. Then, on October 31st, 2008, a mysterious person using the name Satoshi Nakamoto published a document that would change the financial world forever. The strange part is that nobody knows who this person really is, not then and not now. Bitcoin isn't just the story of a digital currency. It's the story of a financial crisis, a mysterious creator, a technology most people didn't believe in, and a movement that grew so large that governments around the world could no longer ignore it. So how did an idea created by an anonymous person go from being worth basically nothing to becoming one of the most talked about assets on earth? And who exactly is Satoshi Nakamoto? You'll see that the deeper we go into the story together, the stranger it becomes. Hit the subscribe button in order to get notified on exclusive and thrilling documentaries like this. This is Ancestral Lens. Now, to understand why Bitcoin was created, we need to go back to 2008. Bitcoin didn't just appear randomly. It was born at a very specific moment in history. And once you see what was happening at the time, a lot of things start making sense. So imagine you are living like in the mid-2000s. The economy looks strong, people are buying houses, banks are lending money everywhere, businesses are growing, and from the outside, everything seems just fine. In fact, for many people, it felt like the good times would never end. But underneath all that confidence, a problem was quietly growing. You see, banks in the United States had started giving out huge numbers of mortgages or home loans, even to people who couldn't really afford them. On paper, that sounds like a terrible idea, and honestly it was. But at the time, banks weren't too worried because house prices kept going up. Their thinking was simple. If the borrower can't pay, we'll just take the house back and sell it. Problem solved, according to their thoughts. But then something happened. House prices stopped rising, and when that happened, everything started cracking. People who couldn't afford their mortgages began missing payments. More defaults started happening, then more, then even more. And suddenly, banks were sitting on massive amounts of bad debt. These mortgages weren't just sitting in one bank. Financial institutions had packaged them together and sold them all over the world. So when the mortgages started failing, the damage spread everywhere. Banks didn't know who was holding risky assets. Investors were panicking and trust started disappearing. Think about that for a second. The financial system runs on trust. Banks trust each other. Businesses trust banks. People trust that their money is safe. But once that trust starts breaking, the whole system begins to shake. That's exactly what happened. Moving on to the most famous moment of the crisis, September 15, 2008. A major investment bank called Lehman Brothers collapsed. After more than 150 years in business, it was gone. It went bankrupt, and that led to panic. People started asking questions they had never asked before. Questions like, is my money safe? Can my bank fail too? And suddenly, those questions didn't sound crazy anymore. Governments and central banks stepped in. They started emergency programs including huge rescue packages, billions of dollars, then hundreds of billions, eventually trillions. The goal was to stop the financial system from collapsing completely. But here's what made many people very angry. While ordinary people were losing their jobs, losing their homes, and struggling financially, many of the institutions that helped create the crisis were being rescued. To a lot of people, it felt unfair, almost like there were two different sets of rules, one for powerful financial institutions and another for everyone else. And it wasn't just happening in the United States. The effects spread across the world. Markets crashed, businesses closed, unemployment rose, entire economies slowed down. For many people, 2008 completely changed how they viewed banks and money. Now imagine you are watching all of this happen. You see governments printing enormous amounts of money. You see banks being rescued. You see ordinary people paying the price. And you start asking yourself a simple question. What if there was another way? What if money didn't depend on banks? What if people could send money directly to each other? What if trust didn't have to come from a financial institution? Well, while millions of people were asking those questions, someone else was already working on an answer. And just a few weeks after the collapse of Lehman Brothers, that answer would appear online. Not from a famous banker, not from a government, not from a billionaire either, but from an anonymous person nobody had ever heard of. A person calling themselves Satoshi Nakamoto, and what they released would become one of the most important documents in modern financial history. Now, at this point, the world was focused on the financial crisis. People were worried about their jobs, their savings, and the future. So when a small document appeared on the internet in October 2008, almost nobody paid attention. And honestly, you can understand why. Compared to everything else happening in the world, it didn't seem important, at least not yet. Satoshi posted a 9-page document online. The title of the document was Bitcoin, a peer-to-peer electronic cash system. It's not exactly the kind of title that grabs headlines, but inside those 9 pages was an idea that would eventually challenge the way people think about money. Nobody knew who Satoshi was, and to this day, nobody knows for sure. Nobody knows their real name, nobody knows their face, nobody knows where they live, nothing. See, Bitcoin would eventually become worth hundreds of billions of dollars. It would make headlines all over the world. Governments would debate it, companies would invest in it, entire industries would be built around it, and yet the person who started it remains a mystery. Over the years, people have tried to solve the puzzle. Some believed Satoshi was a computer scientist. Others thought it was a group of developers working together. Some even claimed specific individuals were Satoshi. Names like Hal Finney, Nick Szabo, and Dorian Nakamoto have all been mentioned at different times, but no theory has ever been proven. And the funny thing is, the mystery actually made Bitcoin more interesting. Because in today's world, everyone wants attention. People build companies and immediately put their face everywhere. They do interviews, they build personal brands, they want recognition, but Satoshi did the exact opposite. He stayed hidden, no interviews, no public appearances, no attempts to become famous, nothing. And that raises another question. Why? Why create something this important and then remain anonymous? Some people believe Satoshi wanted Bitcoin to stand on its own and not as the project of one person. It should be seen as an idea. If Bitcoin depended on a single leader, then it could also be weakened by that leader. But if the creator disappeared, people would be first to focus on the technology itself. Now, whether that was the reason or not, we don't know. But what we do know is that Satoshi wasn't just talking, he was building. For months, Satoshi worked with a small group of developers online. They were improving the software, answering questions, testing ideas. And then on January 3rd, 2009, the Bitcoin network officially came to life. The very first block of Bitcoin was created. It is known today as the Genesis block. And the message was hidden inside that block, a message that many people still talk about today. It referenced a newspaper headline from that same day, The Times, 03 January 2009. Chancellor on brink of second bailout for banks. Satoshi could have hidden any message at all, but that's what was chosen, a reference to governments rescuing banks during the financial crisis. To many people, it wasn't just a timestamp, it was a statement, almost like Satoshi was saying, this is why Bitcoin exists. Because at its core, Bitcoin wasn't created as a way to get rich. Most people forget about that. The original idea wasn't Lamborghinis, it wasn't influencers posting screenshots of profits, it wasn't people becoming billionaires or millionaires overnight. The original idea was much simpler, to create a system where people could exchange value directly without needing a bank, without needing permission, or without needing to trust a central authority. Now that sounds good in theory, but there was one huge problem, a massive problem in fact. Creating digital money is easy. People had tried that before. The difficult part is stopping people from cheating, stopping them from spending the same digital money twice. And for decades, nobody had solved that problem properly. This was the challenge standing in front of Bitcoin. And honestly, most people assumed Bitcoin would fail just like everything before it, because the idea sounded impossible. A digital currency with no bank, no government, and no company controlling it. But somehow, Satoshi had found a solution that would become the foundation of everything Bitcoin is today. And once people started understanding how it worked, Bitcoin slowly began turning from an obscure internet experiment into something much bigger, because the technology behind Bitcoin was unlike anything that had come before it. In 2010, Bitcoin still had that problem of nobody knowing what it was. It existed, but mostly inside small internet forums. A few programmers understood it, a few technology enthusiasts were interested, but outside that circle, almost nobody cared. On May 22, 2010, a programmer named Laszlo Hanyecz made an unusual offer online. He said he would pay 10,000 Bitcoin to anyone who could get him just 2 pizzas. Now, today, that sounds completely insane. But back then, Bitcoin wasn't worth much. People weren't thinking about future prices. Nobody was talking about Bitcoin reaching thousands of dollars, or tens of thousands, or even higher. At the time, Laszlo simply wanted to prove something. He wanted to show that Bitcoin could be used to buy a real product, something physical and ordinary, something everyone understood. Eventually, someone accepted the offer. 2 pizzas were delivered and 10,000 Bitcoin changed hands. Just like that, Bitcoin had completed one of its first real-world transactions, and while it seemed small at the time, it became a historic moment, because for the first time, Bitcoin wasn't just internet money, it had been exchanged for something real. Today, that date is celebrated every year as Bitcoin Pizza Day, and the reason is obvious. Those 10,000 Bitcoin would eventually become worth millions of dollars, then hundreds of millions of dollars. At some point, even over $500 million for 2 pizzas. Whenever people hear that story, they usually focus on how expensive those pizzas became. But honestly, that's not the most important part. The important part is what the transaction proved. It proved that Bitcoin could function as money, and not just as an idea or just as software, but as something people were willing to exchange value for. And from that moment, Bitcoin slowly started gaining momentum. Very slowly at first, then it gained faster. As more people discovered Bitcoin, new communities began forming online. Forums became active. Developers started contributing. Early adopters started sharing ideas. And for the first time, people began wondering whether Bitcoin might actually have a future. Still, most of the world wasn't paying attention. Banks weren't worried, governments weren't worried, major investors weren't interested. Bitcoin was simply too small. But that's often how big changes begin. They look insignificant at first. And while Bitcoin was growing, something else was happening. People were starting to realize that Bitcoin wasn't just useful for sending money, it was also limited. Now, why does this matter? Unlike traditional currencies, Bitcoin has a maximum supply. Only 21 million Bitcoin can ever exist. That's it. No more. Just 21 million. You and I know that governments can print more money and central banks can create more currencies. For Bitcoin, the rules were built into the system from day one, and changing those rules would be extremely difficult. To many supporters, this was one of Bitcoin's biggest strengths, because they believed scarcity creates value. If something is limited and more people want it, its price tends to rise. And as more people learned about Bitcoin's fixed supply, interest started growing, not just among programmers but among investors, entrepreneurs, and eventually the media. As demand increased, Bitcoin's price started rising, slowly at first, then much faster. And that's when a completely new type of person entered the story: the speculators, who are the people hoping to make money. Suddenly, Bitcoin wasn't just attracting people who believed in the technology, it was attracting people who believed in the price. I believe you understand that once money enters the picture, attention follows. This leads to more headlines, more debates, more excitement, more criticism, and more people asking, is this the future of money, or is this one giant bubble waiting to burst? For the first time, Bitcoin was moving from the corners of the internet into the public spotlight, and the more attention it received, the harder it became to ignore. But with that attention came a new challenge. A challenge that would follow Bitcoin for years. years, because the moment governments and regulators started noticing Bitcoin, they began asking a very different question. Not questions like, what is Bitcoin? No, but how do we control it? And that battle would become one of the biggest chapters in Bitcoin's history. Let's be honest, a lot of people didn't discover Bitcoin because of its mission. They discovered Bitcoin because they heard stories about ordinary people making extraordinary amounts of money. A person who bought Bitcoin early, a student who invested a small amount, a programmer who forgot about his Bitcoin wallet, and years later, those holdings were suddenly worth a fortune. Now, whether those stories were completely true or not, they had an effect. They created attention, and attention attracts people. By 2013, Bitcoin's price had risen dramatically compared to previous years. But Bitcoin wasn't just going up, it was also crashing hard. This is something many newcomers don't understand. Bitcoin's journey wasn't a straight line. The same assets that could rise hundreds of percent could also lose huge portions of its value. This could happen sometimes in a matter of months and sometimes in weeks. And every time that happened, critics would appear. They would say, "See, we told you, it's over. Bitcoin is dead." The funny thing is that people have declared Bitcoin dead countless times, yet somehow it kept coming back. Now remember something, when Bitcoin was small, governments didn't pay much attention, because why would they? It wasn't affecting the financial system, neither was it competing with national currencies. But as Bitcoin grew, that changed. Governments started asking difficult questions. If people can move money without banks, how do you get to regulate it? If transactions happen globally, how do you monitor them? If Bitcoin becomes popular, what does that mean for existing financial systems? These weren't simple questions, and different countries responded differently. Some countries embraced Bitcoin, some restricted it, some tried to ban parts of it, others spent years trying to figure out exactly what it was. And while governments were debating, Bitcoin kept growing. Then another major shift happened. Institutional investors started entering the market. Now this was important because for years, many large financial institutions had dismissed Bitcoin. Some called it a scam, some said it would never survive. But as time passed, their attitudes started changing. Large companies began buying Bitcoin. Investment firms started offering Bitcoin-related products. Major financial institutions began discussing it seriously. The same system Bitcoin was originally created to challenge was now starting to adopt it. That's one of the biggest ironies in the entire story. A project born out of distrust in traditional finance was now attracting the attention of traditional finance. At this point, Bitcoin was no longer just a technology project. It had become a global topic. People argued about it constantly. Some believed it was the future of money. Others believed it was pure speculation. Some saw it as digital gold. Others saw it as a dangerous experiment. And you know what? The debate still exists today because Bitcoin sits in a strange position. It's not exactly like traditional money, but it's also not just another technology. It's something in between. Something that forces people to rethink old assumptions about value, trust, and ownership. Even as Bitcoin became more popular, one mystery refused to go away: the creator. While Bitcoin was becoming a global phenomenon, the person who started it was nowhere to be found. And that mystery only became more fascinating as Bitcoin grew, because the larger Bitcoin became, the more people wanted answers. Who was Satoshi Nakamoto? Why did he disappear? And what happened to the enormous amount of Bitcoin believed to belong to him? If Bitcoin's rise was incredible, the story of its creator might be even more unbelievable, and that's where the final chapter of this story begins. Now, after everything we've talked about, financial crisis, the white paper, first Bitcoin transactions, the booms, the crashes, and Bitcoin becoming a global phenomenon, there's still one mystery we haven't solved, and honestly, it's probably the most fascinating part of the entire story, because the person who created Bitcoin simply disappeared. You've created one of the most influential financial innovations of the 21st century. Your invention is spreading across the world. Millions of people are talking about it. Governments are debating it. Investors are pouring money into it, and then you walk away. That's exactly what happened. For about 2 years, Satoshi remained active online, communicated with developers, answered questions, improved Bitcoin software, and helped guide the project during its early days. Then in 2010 and 2011, his activities started becoming less frequent. The messages became fewer, and eventually he was gone. One of his final known communications came in April 2011. After that was silence. And more than a decade later, the mystery remains unsolved. Researchers believe Satoshi mined a huge amount of Bitcoin during the network's early days, possibly around 1 million Bitcoin. Now, depending on Bitcoin's price, that could be worth tens of billions of dollars, sometimes even more. You could be one of the richest people on earth and nobody would know who you are. But what's truly remarkable is that those Bitcoin have largely remained untouched. Year after year, bull market after bull market, those coins stayed where they were, which only deepened the mystery, because most people would struggle to ignore that amount of wealth. Yet, whoever created Bitcoin appears to have walked away from it, and that raises a question nobody can answer. Was it one person, or a group of people, or someone who wanted privacy, or someone who passed away? The truth is, we simply don't know. Or maybe that's the point. Whether Satoshi is ever identified or not, Bitcoin no longer depends on him. Today, millions of people own Bitcoin. Developers continue improving it, companies invest in it, countries discuss it, and an entire industry has grown around it. Bitcoin survived because it became bigger than the person who created it. And if you think about it, that's actually very unusual. Most inventions are closely tied to their creators. For instance, people know who invented the telephone. People know who founded major companies like Apple and so on. People know who built famous technologies. But Bitcoin, the creator vanished and the project kept going. If you go back to the beginning, back to 2008, Bitcoin was really asking a simple question. What happens when people stop trusting traditional systems? That question is what gave Bitcoin life. An idea that money could exist without a bank or a government or without a central authority controlling every transaction. Whether you agree with that idea or not, changed the conversation forever. And that's why the story of Bitcoin is so interesting, because it's not just the story of a cryptocurrency, it's a story about trust, a story about technology, a story about power, a story about one of the greatest mysteries on the internet. And somehow, it all started with a 9-page document published on October 31st, 2008 by someone the world still can't identify.